Chapter 1. The Early Days of Enron. Enron was founded in 1985 by Kenneth Lay, a former energy executive. Lay was a well-connected figure in the world of politics and business, and he had a reputation as a skilled dealmaker. At first, Enron focused on natural gas trading, but it soon expanded into other areas of the energy industry, including electricity trading, energy production, and even broadband services. Enron quickly became known for its innovative approach to business. The company used complex financial instruments to hedge against risk, and it was the first to market in many new areas of the energy industry. Enron's stock price soared, and it was hailed as a symbol of American innovation and success. But beneath the surface, there were problems brewing. Chapter 2. The Rise of Enron. Enron's financial statements were notoriously difficult to decipher. The company used a variety of complex accounting methods to hide losses and inflate profits, and it was often unclear exactly how much money the company was making. Enron's top executives, including Lay and CEO Jeff Skilling, were known for their aggressive management style. They encouraged employees to take risks and innovate, but they also created a culture of fear and intimidation. Employees were encouraged to invest their retirement savings in Enron stock, which was seen as a safe bet. But as it turned out, Enron stock was not a safe bet at all. Enron's executives were driven by a desire for profit at any cost, and they created a culture of fear and intimidation that discouraged employees from speaking out about the company's problems. Chapter 3. The Enron Scandal begins. In 2001, a series of events caused Enron's stock price to plummet. The first blow came when the company's auditor, Arthur Andersen, discovered irregularities in Enron's accounting practices. Enron's stock price continued to fall, and rumors began to swirl about the company's financial health. Skilling resigned as CEO, and Lay took over the job once again. But it was too late. Enron's stock price continued to decline, and the company was eventually forced to file for bankruptcy in December 2001. Lay and other top executives were indicted on charges of fraud and conspiracy, and the scandal rocked the business world. Chapter 4. The Fallout from the Enron Scandal. The Enron scandal had far-reaching consequences for the business world. It led to a wave of new regulations and oversight in the financial industry, including the Sarbanes-Oxley Act, which requires publicly traded companies to implement a variety of new financial reporting and oversight measures. The scandal also led to a renewed focus on the importance of ethics and transparency in business. Today, companies are held to a higher standard of accountability, and executives are expected to act with integrity and honesty. Chapter 5. The Role of Arthur Andersen in the Enron Scandal. One of the most controversial aspects of the Enron scandal was the role of Arthur Andersen, Enron's auditor. Andersen was one of the largest accounting firms in the world, and it had a long history of working with Enron. But Andersen's role in the Enron scandal was far from straightforward. The firm was accused of helping Enron to hide its losses and inflate its profits, and it was eventually found guilty of obstruction of justice. Chapter 6. Lessons learned from the Enron scandal. The Enron scandal serves as a powerful reminder of the importance of ethics and transparency in business. It shows that even the most successful companies can be brought down by a lack of integrity and a culture of greed and corruption. Today, companies are held to a higher standard of accountability, and executives are expected to act with integrity and honesty. The Enron scandal forced a new era of corporate accountability, and it has led to a number of positive changes in the business world. One of the most important lessons from the Enron scandal is the importance of transparency in financial reporting. Companies must be open and honest about their financial situation, and they must be willing to be held accountable for their actions. Another lesson is the importance of creating a culture of ethics and accountability within a company. Leaders must be willing to lead by example, and they must be willing to create a culture of openness and transparency. Finally, the Enron scandal shows the importance of a free and independent press. The media played a critical role in exposing the scandal, and it helped to hold Enron accountable for its actions. Without a free and independent press, it is unlikely that the scandal would have been uncovered. In conclusion, the rise and fall of Enron is a cautionary tale for businesses and individuals alike. It shows the dangers of a culture of greed and corruption, and it highlights the importance of ethics and transparency in business. By learning from the mistakes of Enron, we can create a better and more accountable business world for future generations.